JP Baric is a Bitcoin miner, the founder and CEO of Mining Store, a technology company that designs, builds, and operates large-scale cryptocurrency mining data centers. He's been mining Bitcoin since it was valued at $70 a coin and is on the cutting edge of what is happening in the crypto space. To me, he is a testament to the impressive results that occur when we choose to invest into something at a fundamental level. This podcast is sponsored by me. Please leave a good review on the podcast and go to newsletter.joshterryplays.com to get more cool stuff. Let's just start towards the beginning. What got you into crypto? What got you started?
So I got into cryptocurrency in high school. I was a freshman in high school, and the reason why I was interested in the technology was because I was kind of like identifying as a libertarian back then, and just like the idea of money backed by the internet, and like the idea of money that wasn't controlled by governments. Just at that time, I was starting to look more into micro and macroeconomics and read more about just how finances worked in high school. And I ended up coming across a TechCrunch article talking about Bitcoin, and the first time I read it, I was like, okay, this is cool. Went down Mt. Gox and couldn't figure out how to buy it. It was like, this is too complicated to get. This is crazy. And then eventually I came upon it again, and then I went ahead and said, I'm gonna actually buy it this time. It seems really cool. Kept reading it. I think I read the Wikipedia, and I was like, Bitcoin, blockchains seemed like interesting tech. I think it was more speculative at the moment. I wasn't really like sold on as much as I am today, where it's like, okay, this is the future of money. I was like, oh, this is a cool like technology, like we'll see if it goes somewhere. And that was around like $70 a coin.
So it was an idealistic concept for you pretty early on?
Yeah, like right from the beginning.
Wow.
I was just really pulled into it because of separation of money and state. And I thought that was really powerful. And I was like, this has the opportunity to be like its own internet currency, not backed by a government, and I liked it. I liked that idea, that concept.
So you got into it, how old were you at that point?
At that point, like 16, 15 years old, I think, freshman in high school, right around then. I had I was an entrepreneur. I had a robotics camp that I was running. When I was an 8th grader, I started my robotics camp and had 10 people, come and build robots, Lego robots, in my parents' basement. And then from there, we started scaling. I started scaling that, hiring people, and started building up capital bases, and then got into Bitcoin. I was like, wow, this is even better than running robotics camps. But I kind of did them in parallel for all of high school.
Did the skills transfer? Did you feel like that taught you something to do what you were doing, or was it just kind of separate?
It taught me more of like how to solve through a problem, like programming, how to break down maybe a bigger problem set into multiple smaller issues, and how to take and grasp some of those harder, more complex problems. And I think with Bitcoin, that helped me not be overwhelmed when I first got into it. So I was able to just understand portions of it and start researching it. And I was really big into computers. So like one of the first things I did was I started trading, started buying Bitcoin, started buying things with my Bitcoin. I bought a MacBook for like 13 Bitcoin for a friend, like all this, crazy stuff. But I ended up building a GPU mining machine in my parents' basement. And this was in like a shoebox, and it had like one graphics card I bought on eBay, and then I bought like 5 or 6 more. And then as I was starting to buy them, the price started going crazy, and so that increased the earnings, but also increased the cost of graphics cards. And I started building like a second rig, and I still remember running those rigs in my parents' basement. And then after that, started scaling the mining operation, and went from there.
How much Bitcoin were you making off that initial rig?
I don't remember. It wasn't actually mining any Bitcoin. It was like mining Litecoin and Dogecoin and stuff like that. So but if I would have held it, like it would have been a lot, obviously. But that's just the nature of cryptocurrencies. Oh, sure. But at one point when we had about 300 graphics cards deployed in Graham, North Carolina. Those were mining 500 Ethereum a day, which was it's insane. That's close to $1.5 million right now. That's crazy. If not more in the market.
That's crazy.
Yeah.
What got you to a point where you were like ramping up? Like, what convinced you to ramp up, first of all?
Well, I really like the idea of like computers, and just like I saw you could put computers to work for you, and I was like, I don't really like how I got into the robotics camp business. I was like, well, I can babysit and make $15 an hour, so let me get 10 kids and kind of multiply my time like that. And then the computer was like, okay, I can get one graphics card that can make me $3 a day. Well, if I get 300 of them, now I'm making $900 a day in profits, split it with my investors, which was just my grandma, myself, and my uncle, and went ahead and put $100,000 in, and we bought all these graphics cards. And my timing was really, really good. I ended up getting in the market not when it was exploding, and I didn't do it because everyone else was doing it. I did it because I was genuinely curious, which means I was on like the beginning of the wave up for both 2013, and then also when I did the Ethereum mining closer to, I guess, 2016.
When did it transition from this is cool to, oh, this is a thing I'm gonna do?
Probably like junior year of high school, maybe senior of high school, right around then, as the company began to grow, as mining store became more of a thing. I started selling, as mining store became a thing, I started selling GPUs in my house. I would sell these cases on eBay, and my friend would go over and build the cases by hand, and we would ship them out. And we started shipping these machines to people, and they started breaking because like the UPS would just destroy these great computers we put together, and it was super annoying. But that's kind of where I was like, okay, maybe this is like more of a business. But I was always very, very entrepreneurial minded, so I always wanted to deploy capital and figure out how to make money from computers. I think it really took off probably sophomore year of college in 2017, when I was like, okay, I can do this full time. I can drop out of school. I can work on this, my company. I can pay my bills, that type of thing.
I'm really interested in what thoughts make it possible for somebody to make those sorts of decisions. Because, I mean, for you at this point, it's supernatural to be doing what you're doing. I doubt that you would think of yourself doing anything else. At least that's the impression that I've gotten from our interactions, is like, why would you be doing something?
I think about building more software.
Okay.
Yeah, I mean, that's, you're exactly right. What gets someone to get over that hump? That's security. I think for me, like having a venture that I've already built out and had successfully, having a venture that I was able to build in the robotics camp business and scale that and see it grow, helped me build that cash base. But then really seeing momentum, seeing things that you were working on after like years, after months and months, because I was actually working on a software with one of my friends, Evan, called Steampool, and it was coded for gamers. You could download it, use your graphics card, mine cryptocurrency. We take a 30% cut, you pay you in PayPal, and that was our business model. We started gaining users, started getting attraction. We had this mining facility, and we started scaling it, the business, and at that point I was like, okay, this is really going to take off. Bitcoin was going up, and that momentum in Bitcoin growing helped me believe that this was not just a fad, that this was going to stick around. And that gave me the opportunity to continue on it and know that when I dropped out of school, I did it sophomore year with one class. I did one online class. And so that one online class kept me in school, like gave me that safety net, but just gave me 6 months to figure out if this is what I really wanted to do. And then after that, I realized this is exactly what I want to do. I'm enjoying it, even though the price had come down. I enjoyed running the business, and I enjoyed hiring people.
So you went from seeing a sort of a slow burn progress to convincing you to act on this, and then from there it turned into something that started working and accelerating pretty fast, right?
Yeah, and people started coming to our website. They wanted we want in Mining Store. We serviced customers and getting into space. People were like, how do I get into this industry? And I remember specifically when I was a sophomore in college, I had my desktop and my computer, and I had 3 monitors set up, and this guy called me, and I think I ended up doing a deal to sell him graphics cards, and I was like in my underwear still, like waking up in the morning, and I made like $50,000 like before I even like got out of bed, and I was like, holy shit, if I can do this like every couple days, like this is amazing. So just kind of that hardware flip and mentality of like buying something from Newegg and selling it to someone else is because you know where that is, and adding a markup was amazing. And that computer equipment, being able to do that at scale, I was really, really impressed, and just like, I guess, became aware of the opportunity that was in front of me and started diving headfirst into it.
It's weird. Whenever we look at what somebody's done, we can't help but look at it at face value, and it always seems like a complete package. And it's like, you started pretty young, and I've noticed, like, for people that start young, when looking at what they've done, it's even more tempting to see like they did it all at once, but it looks like it was an extremely gradual process for you.
Yeah, extremely gradual. I'd say even today it's still gradual. Right now we have maybe 15 employees, 20 plus when you add contractors and stuff, like 25 people on the team. And I still think that's small. I still think that we're not doing enough. I still think that we have opportunity. So that's where I'm putting my time now. It's like, how do we scale and build a business? And it is gradual. I haven't taken any VC funding. I haven't had any rocket ships to jump on. It's just been Bitcoin loading, keeping me growing the company and growing with the crypto ecosystem. But that's starting to change. We're starting to look at outside funding. We're starting to grow the company in more of a VC scale and looking to go from 20 employees closer to 60 or 70 and really building out this massive organization that is the whole point of it is to scale the mining business and put computers to work for other people.
What does it mean to de-risk something? To de-risk an industry?
To de-risk an industry, in my opinion, would mean bringing in large amounts of capital to help build bridges between like the financial system we have today. So insurance system, the capital markets, building in derivative markets. That's what it looks like when I say like de-risking an industry. And I think we're getting there in the mining space. It's been risky because when you and also de-risking an investment is getting other people's capital. Like I didn't realize that now, but when you're 100% in a business and I own a majority of my business and I funded most of the business myself, that's very risky. Like there's times where I was like, shit, I should have raised other outside capital so I could have grown the company more effectively, or should have scaled. So it's not just all relying on my capital to do that.
Why does it matter? Why does the larger amount of capital matter?
Well, the more capital you get in this space, the less it, losing, if you have $100 million and you lose $1 million, that's not that big of a deal. But if you only have $1 million and you lose $1 million, you lost 100% of your profit, everything you worked for. De-risking, I think, helps you take more ambitious, calculated risks on future developments that you don't know if the success is going to be there. So like maybe launching a new product or building out a new product line where you have to do a lot of work up front before the customers come. Stuff like that will help you de-risk and helps you de-risk as an entrepreneur. But as an entrepreneur, you get to a point, like we mentioned, where you believe in yourself and you can do it no matter what. And I think that's also a de-risking moment where you're now understanding that you have the knowledge and the capabilities to almost feed yourself every day. But not only that, but to feed, to help build the company to help provide a lifestyle and help feed and, build community with all these other people. And you start to realize that you can do it. And just because you have enough knowledge in the space that you've built up over time, that it's going to allow you to be an expert, that you just feel confident. You're like, I can do this no matter what. Even if I lose everything today, the knowledge I've gained, I can build $1 million business, in 6 months.
The more I think about investing, the more I'm convinced of the idea of becoming more capable of risk over time. That's the way I've been thinking about investing. Is if you have a foundation that is secure and you're certain of it, then something past that foundation, it's less frightening to risk. It's less dangerous to risk, because I think the more you go out on the cutting edge of something, which you're right on the edge of that, the more there's going to come mistakes and errors with it. Not because you're performing at any lower level, you're actually performing at a higher level, but it's just the nature of the thing, because you're dealing with things that haven't been done before. And to me, it's it seems like you want to have that be have as little cost as possible, because the more cost the error has, the more it affects your moving forwards. Is that kind of along the lines of what you're describing with de-risking?
Yeah, that's 100% right. The reoccurring costs. And I think for me, as I've grown my company, I've gone through some hiring cycles, and I learned that you can hire a bunch of people even if they're older than you and they still have no idea what they're doing. And a lot of people don't have an idea of how to actually build a business, how to come in and find revenue, how to build an industry. And a lot of people want that salary. That's all they care about, and they're coming in day to day to work for that salary. They might not be thinking out of the box. They might not be working 100% for you, but they're here to check the box and to make the next, to work their job. Basically, they're not committed to it 100% like a founder is, like someone who's putting in sweat equity. There's times in my business where I wasn't paying myself at all, but I was, paying my staff, and that was because I was naive and I was a young founder and didn't understand how powerful it is and important it is to pay yourself first when you're running a company, because you can always bring someone in, but when you bring in employees, it's very different than hiring a contractor or than hiring someone on Upwork. An employee really becomes your responsibility. You become responsible for their time and their output of what they can be productive on. You become responsible, for their family and their well-being and their expenses. And that's a huge responsibility when you're committing to someone, to hiring them. And when we commit to people, we're saying we're going to hire you for 3 months, we're going to see how it goes. But you're right, with those expenses, and then you start adding, like, if you add debt, if you add debt, if you add employees, everything starts to bog down, especially those reoccurring expenses. So you need to be very lean, and thankfully we've been able to be lean. But as you begin to scale, you have to bring on new people to do new jobs and new opportunities and take things off your plate. Can't do everything. So it's that fine balance of hiring for what you're good at, or what you can do, versus and focusing on what you're good at.
I'm curious if you can put in perspective for me. Like, we've come such a long way from like where Bitcoin started. Like, you used to be able to mine Bitcoin on a laptop, right? Like, that was doable. Can you compare what a typical miner is doing to what like the difference between a laptop and what a typical miner is doing these days? Can you put that in perspective in some way?
Yeah, so let's see. I remember running on a desktop computers, or maybe graphics cards is probably the right way. And those graphics cards would get on Bitcoin, I don't know, maybe a couple mega hashes. Let's say 2 or 3 mega hashes, which is 1 million hashes per second. The new machines do 110 terahashes, which is 1 trillion hashes per second. So we're talking magnitudes of, I guess maybe that's 10x, maybe even 100x. If you go from 1 mega hash to 100 terahashes, and that's what we saw in the industry. It's insane how much how faster, or how more efficient it's gotten, and the speed now of these ASIC chips. Because before you were running this software on a chip that wasn't dedicated to just doing 8 SHA-5256, which is the Bitcoin mining algorithm. And then you started building chips just for that, and it was much more efficient. Like the first jalapeno miner I bought, which was built by Butterfly Labs, was a 300 mega hash jalapeno miner, which was 100 graphics cards, let's say. If each graphics card did 3 mega hashes, and that's in one little box about this big. So that's insane how quickly it grew.
I think we were talking one time about as you move towards the thing that you want to get to, the more productivity, more efficiency, it becomes simpler. I think I remember you were calling these miners blow dryers, was it?
Yeah, glorified blow dryers, hair blow dryers. And that's all they are. They just produce a lot of heat and make a lot of noise.
All right, so you gotta run blow dryers. So what are the challenges in running blow dryers?
Well, like running a blow dryer, you have to keep it cool. So you have to keep new, fresh air coming into this computer, this blow dryer. You have to make sure that the blow dryer has connectivity to the internet so it can send out its work. You have to make sure the blow dryer can exhaust that heat so that it can produce new heat, and so the heat isn't coming back into the inlet of the blow dryer or of the Bitcoin miner. And you have to make sure that it doesn't get wet and snow in it. And you have to make sure it's running 24/7, 365 days a year. And you have to make sure they're all plugged in. So you have to need thousands of these blow dryers to mine Bitcoin. So yeah, it gets pretty complicated pretty quick.
The profit, at least from the outside observer, the profit looks pretty straightforward. Where do the costs come in for Bitcoin mining?
Yeah, so the majority of the cost is in electrical. You spend a lot of money on electricity ongoing costs. Then you have electrical substations, electrical infrastructure, switchgear, transformers, PDUs to actually get it up and running, which is your CapEx. You have, sometimes shipping containers, fans. Those are all CapEx items. OpEx is electricity, staffing, software, and that's really about it. Those are your three biggest costs. Cooling, but that's going to be part of the electricity there, and you just run these hair dryers in these massive facilities. And the biggest thing is now getting the hair dryers, because everyone in the world wants one of these hair dryers, and the price of the hair dryer has gone up by 5 or 6x since Bitcoin price went from $10,000, $15,000 to $50,000. The hair dryer, to get these hair dryers, get the Bitcoin miners, went from a 2-month time frame when no one else wanted them to now 6 months.
Where's the advantage to be found in this industry? Because it's like, it's an interesting thing to me how it's all about the ideal is decentralization, and that has a like a governmental force of checks and balances, right? So there's like a constant sort of leveling force in that in the Bitcoin network, including in if somebody gets a more advanced computer on the line, right? The overall difficulty of what's happening raises. So it's like nobody can get too much of an advantage in the field, but I imagine there are still advantages to be had. Where are the most where's the biggest advantage to be found?
Yeah, I think one of the biggest advantages is efficiency. So getting cheaper electricity, you can go from 4 cents to 2 cents, and that's 100% drop in cost. That's one of the biggest advantages. Second advantage is hash rate, like how much can you get out of a machine? How much can you overclock it? And then one of the third advantages that we focus on a lot is like accessibility. Providing a software layer to give people accessibility to Bitcoin mining allows us to work on selling those units on a more consistent basis and at a higher upcharge, and continuing to flush inventory or move new inventory into our facilities and grow. So that's another thing I would say is an advantage. And distribution, that's something where we focus on that most people don't, is we're putting out a lot of content to educate people on Bitcoin mining, to then sell them equipment so that we can build the amount of machines we have under management. And I think building a really good software platform on top of Bitcoin mining is not something anyone's focused on. Everyone's focused on the energy and how do I make my machines more efficient, and we are too. We're building out facilities working on that, but very few people are focused on distribution and I would say gamification, or making this like an industry that everyone can participate in, and not just institutions, which is kind of where we are at now. Like even one Bitcoin miner is $20,000.
What does gamification look like for this?
Well, to me it looks like the ability for people to start generating passive income through these computers, as I mentioned, putting computers to work for them and making it a game, because there is huge opportunity to speculate on the value of hash rate, the future value and the current value. So over the past 6 months, I mentioned that changed a lot. We went from 7 cents a terahash, which is how many, it's a unit of measurement that we were talking about earlier of how fast these machines run, to right now at like 40 cents a terahash. And so the value of the machine changes, the value of the terahash changes, the value of Bitcoin changes. But at the end of the day, you can put these computers to work for you and make consistent returns. And so for me, gamification is providing accessibility to this space for the masses, allowing them to buy a miner, maybe buy a percentage of a miner, and participate in this economy that they don't even know exists, or they're not participating in. And when they're participating in it, they're participating in it at their house, not at their house, but on a mobile app. And these machines are run in data centers all across the world, and they can decide which data center they want to go into. And each data center has a very defined power rate of how much it's going to cost to operate that machine, and they make the difference. So that's kind of what I mean by gamification of this asset class.
I think it's important.
It's super important, and I think that with the investments that we currently have today, you can put money in the stock market. There's a lot of people already in the stock market. There's a lot of passive investors in the stock market that own a majority of the shares. So the float's really small, and it's provided great returns, but at the same time, it's a little bit different. Computers that make money, print money, they have a lower barrier to entry, and it's something where it can be a hands-off investment, and it's based on Bitcoin's technology, which has been around for 10 years and has been one of the best ways to consistently gain income. And most people don't understand that.
I've already heard so many arguments refuting it that it feels a little bit old hat for us to go over it almost. But the energy arguments, you being in the space, Bitcoin miner, from your perspective, what's your favorite argument refuting the problems around energy usage?
Yeah, I mean, the biggest argument by far is Bitcoin uses too much energy and it's going to destroy the planet.
Yeah.
And when it comes to Bitcoin mining, and what I say to that is Bitcoin's energy usage is a feature. It's not a bug. It's not a problem. It's a feature. And what I mean by that is that if you look at, there's something called the energy, energy world index or energy composite index, and it's basically how effective is a country in maintaining their electrical grid, and what does that do to their GDP. And if you're able to maintain a steady electrical grid that can supply energy to your citizens 24/7, your GDP is going to go up, it's going to increase, it's going to have more productivity. So what we see with Bitcoin miners is that we're actually going to the cheapest energy in the world, which means that no one's usually buying this energy. We're going to wind farms that are transmission curtailed, which means the wind is spinning and no one's buying the power. They can't even sell it to the grid because there's too much power on the grid and the prices are going negative. So we're going to the spots where no one actually wants the power already. We're not taking power from people like in New York City saying, oh, you can't have it back, making it more expensive for everyone. No, we're actually building in consumption at a large scale. And the grid is a very hard thing to maintain. You have to maintain production and consumption 24/7, and it has pockets all around the US and the world. So it's not just one area where you have to maintain it, but you have to maintain that production consumption balance all across the United States, all across the world. And so Bitcoin miners come in and they build a buffer of production. So people can produce a bunch of power that isn't necessarily needed, but it can go to the Bitcoin miners, they can consume that power, and then they can be part of load response programs or demand response programs, and those programs are going to pay the Bitcoin miners to turn off when people need the power. So instead of the power prices spiking like to $9,000 a megawatt hour like we saw in the Texas freeze, Bitcoin miners can help reduce that by turning off their energy, turning off their mining machines, and giving that power back to the people. So Bitcoin miners really, in my opinion, build grid resiliency and help improve the GDP, help improve world trade, and help use stranded energy.
Man, there's a part of that never clicked for me before until just now. I'm a big fan of network effects, and it's like I generally think of network effects as social, but I mean what you're describing is a physical network effect, where it's like the more people involved, you're going to have the same exponential growth of strength, resilience, power, all of that, I would assume, just like you have a network effect in with social effects.
100%, and that's how the grid operates. The more power producers, the more redundancy we have, the stronger it is, the cheaper the power will be for people across the US and the world, and the better we can democratize the power and energy trading, so that you don't have as intermediaries between the power producers and the power consumers. The cheaper the power gets for everyone, which is helping people build stuff, fabricate stuff, produce things, work. And Bitcoin miners are the absolute best, one of the absolute best industries at doing this, because we go to the industry and we say, we want the cheapest price. We'll give you all the upside. We'll give you the ability to turn us off whenever you want. But we want to buy your power when no one else does. And there's no one else in the world that does that. Data centers can't do that. Bitcoin miners, we can though, because we all collectively work together to secure the network. And if some of us shut off in different regions, it's not going to affect the Bitcoin network, and we're going to make money by selling the power back, or we're incentivized to, because it keeps our costs operations really low.
It's funny, I almost didn't ask you that question because I've heard it answered a bunch of times. I'm really glad I asked you the question. That's one of my favorite answers so far.
Well, thank you. I appreciate it. I need to work on writing more about that subject because it's something that's very touchy, and people, I think, have a misunderstanding of it.
If people feel like they're on board with that, and what you're saying about this is something that can be gamified, it's something that everybody should be involved in, what percentage of the population, for example, is this something anyone could get into? And you're running your business by being agile and slim and running to these sort of areas where power is not needed. is this something that's happening at the micro level all through a city, or like what's that look like?
Yeah, not in the micro level because they're regulated by utilities, but it is happening in the in the global level. We're finding places like in Oklahoma or in Texas that don't have any power, that our power is so cheap. And when I mean don't have any power, I mean the power is super cheap there. That's why everyone goes there. So that's what the game is becoming. What was your question again though? About everyone? Should everyone do this?
Yeah, it's just I'm curious how if this connects to like how other people are taking advantage of this. Because you were talking about how like lots of people can make passive income from this, and I'm curious, is there a Bitcoin miner on like beside every utility panel behind a garage? Like what does it look like?
Yeah, I don't necessarily know if it becomes decentralized in that sense, where it's like we put Bitcoin miners everywhere. I think that's something called Helium Network that does decentralized internet, and they're working on decentralized Wi-Fi for like IoT devices. That is more of like a miner in every house type of deal. Because Bitcoin miners and because power is where is the biggest cost, you need to collectively group them in similar areas where power is extremely cheap. But I think everyone will be able to get exposure to this space through an iPhone app, through software, where they're buying almost like they're buying the miner and machine, and they're putting it in the facility, and they're owning a part of the data center. Just like you can buy like an Amazon Cloud Instance server, you're really buying a machine, and then you're using it to mine Bitcoin. I think that's going to keep growing. We already see, companies like Mining Store ourselves are working on making that easier, making that more transparent, and the ability to just do it with one machine online and never have to touch the machine, never have to see it, but just be able to start collectively, getting text messages every day of how much your machine's making for you. It really is like buying almost like it's like buying a little real estate, right? You're buying a lot of land in the middle of that has a asset that's producing capital and that's generating cash flow, and this asset's job is to use energy, and the cash flow all comes from the Bitcoin network, and everyone can ride the wave. Bitcoin mining keeps on growing. It's at 15 billion a year. In 2019 it was at 5 billion a year. In 2025 I think it'll be closer to like 25, 30, 40 billion dollars of mining rewards every single year to Bitcoin miners. So there's a huge amount of cash flow being spun off from the Bitcoin network, and it's being picked up by institutions and everyone who's Bitcoin mining. But you need to be playing the game to get exposure to the space, and it's more about playing in a long term. If you play it like any type of investment, like not any investment, but if you play during the hype cycles, you're going to end up losing money. If you're only buying at the tops and you're only doing it because it's cool, then you're not going to make money. But if you're doing it because you believe in it and you have conviction, and you're consistently buying, stats, or what I'm calling stacking watts, you're stacking watts every day, then you're going to continue to make profit, and it's going to continue to build your Bitcoin portfolio, build your nest egg. Because at the end of the day, for me, it's not about how many dollars I have in my bank account. It's about how many Bitcoins I can have in my Bitcoin wallet. And that's what I believe, that's where my time and energy goes. Because you're denominating your life in a currency that's working for you, in a network that has real scalability and that is scarce. And I heard a great analogy on when I had my last podcast, was it's a measuring stick. We've been building measuring sticks to measure our time for thousands of years. When I was in Mexico, I went to the Chichen Itza, which is this pyramid, and they built the pyramid just to track the time, just to track the days of the year. And we put all this energy and effort into tracking the seasons, tracking time. And then governments came along and they introduced currency, and currency allowed us to track time effectively, and it allowed us to track time with a sovereign nation, to give us a yardstick of what we could use to compare our time. But when we talk about dollars, we always have to mention the year we're talking about, how much things cost. In 2009 this cost this much money. That's because sovereign governments changed the yardstick. It keeps getting longer. That US dollar keeps coming worth less and less time, and there's nothing you can do to protect yourself. But then something like Bitcoin comes out and we say the yardstick is 21 million Bitcoins. It's never going to change. That's the yardstick you can use to measure your time in. It's never going to change. It's never going to get more or less. And you have to compare it to whatever you think it's worth. And Bitcoin's compared to dollars and yen and everything else. And the way Bitcoin's secured and the way Bitcoin has value is because of the energy usage. And that's what the mining companies do. We spend millions and millions of dollars on energy to secure the network, which then in returns makes Bitcoin more valuable and is that positive feedback loop.
I love what you said about stacking watts. Because we've like recently, there's been a bunch of stuff on Twitter about stacking sats, where the price has gotten high enough that, you know, there's the conversation about the what's it called, unit bias, I think, right? Yeah. And it's true, right? We like perceive things differently as it raises in price, but so it's like sats are like the fundamental concept of Bitcoin, and then watts are sort of the fundamental that's supporting Bitcoin. So essentially it's, I guess, the next step in investing in Bitcoin is investing in the thing that creates Bitcoin. Is that the natural progression? Is that the way to think of it?
Yeah, it's a derivative. It's a derivative that runs in the physical world that supports Bitcoin and that produces a steady cash flow. And that derivative is a computer. And that's computer's a Bitcoin miner. And that Bitcoin miner is basically a hairdryer that you plug into the wall. There's thousands of them running in data centers. Like that's what we sell, and that's what is going to be the backbone of this massive energy economy. I think energy companies are going to start quickly realize that they're going to become Bitcoin miners, and Bitcoin miners are quickly going to realize they're going to become energy companies. Yes. And they're going to merge together over the next 20 years, and some of the biggest energy companies will become Bitcoin miners, and some of the biggest Bitcoin miners will become the biggest energy companies in the world. And you know, we're seeing that with Tesla. They're just changing how they trade energy. They're changing renewable energy credits. They're issuing them like crazy.
When we started talking, you mentioned with the robotics camp, some of that might have given you enough background to not be quite so overwhelmed when you were looking into Bitcoin. Looking into Bitcoin now, I think, has gotten like pretty user friendly because we have all these platforms that allow you to get started on it. But if you wanted to push farther into the field and move from just Bitcoin itself to into the Bitcoin mining process to get interested, where's the place to start for somebody?
There's not a good place for Bitcoin miners, really. There isn't. I mean, you can go on YouTube, you can listen to podcasts, you can check out my podcast, Digital Gold, you can go on TikTok and see our facilities, but there's not like a step-by-step guide. Because it changes so quickly. There's new computers every day. There's new supply chains. We're living in the physical world. It's not just like buy Bitcoin and it's going to stay the same. So the technology changes, the power prices change, the network changes, the industry changes. But what remains the constant is the ability to generate sats from your Bitcoin miners with low-cost energy.
All right. So this leads me to a philosophy question, which, I don't know. There might be something here. We'll see. So what you're talking about is on the edge of what we know. It's cutting edge technology. So I keep wanting to ask this question of people, which is like, can we talk about the concept of like asking for permission? Because there seems to be a gap between somebody that looks at something and goes, I think that could work, and then goes and does it, and somebody that continually waits for more confirmation. And to me, you're one of the people who does not wait for, shall we say, external confirmation. So I guess I'm like wondering, like, what gives you the option in your mind to say, no, I have the confidence to make this work, basically to give yourself permission, right? Because some of us wait for external permission and some of us give ourselves permission. Does this question make sense?
Yeah, I would say for me, it's not being scared of failure and understand that if you fail, you can get back up on your feet and continue walking. You're not going to die. You messing up is not going to hurt anything. You making mistakes, it happens. Life moves on. And it's important to be able to take that step and say, I'm going to do this, and then holding yourself accountable, getting groups of people to hold you accountable when you tell people you're going to do that. When you take that step forward, I think it's super important, but it's about giving yourself permission to fail, to not fearing failure, but accepting it as a fact of life. That by you not doing it, you're actually failing already. And the only way you're going to be able to get to that fictional self, I say we all have a belief in what we believe to be where we are today and where we want to be in the future. And I think the happier you can become happier, that you become more content if those two images of yourself are very closely aligned. And the way you make those closely aligned are by living to your true authentic self, which is by listening to your inner voice and by making those decisions when you feel that urge to do something and actually doing it, and not being afraid, not being scared, not living in your mind or the realm of possibilities of what could go wrong, but living in the moment and understanding that if it goes wrong, it's okay. It's not the end of the world. And you can learn.
Do you believe it's a skill set?
I do. I believe it's a mindset. I mean, skill set, mindset, I believe it's something that you have to be taught, learn. You have to learn. Your parents have to help you. You have to help yourself. Like, you need to understand that you will be okay and you fail. You have to understand that if you have a different belief in your mind, and you were not brought up like that, or you were not taught that growing up, and school does definitely not teach us that. It doesn't teach us to fail. It teaches us to follow the books, follow the guide, follow the path forward, go to college, get a job, go up, climb the corporate ladder. So society doesn't push people to fail. It pushes people to do what's expected of them. But to do the unexpected is to face failure and to believe in yourself.
It makes perfect sense. To be on the cutting edge is to be located where the most failure points are available, which requires the most acceptance of failure.
Makes complete sense, but it's hard to overcome.
What do you think about what's happening with the transition for Ethereum, moving from proof of work?
Yeah, I mean, they've been trying to do that since I actually started mining Ethereum in 2017, which is crazy now that it's actually happening. But I don't really have much thoughts, honestly. I think it's cool that they're moving to POS. I don't think it has the same level of security as proof of work. I think that POS is more of like a, let's all put our money in banks and gain interest. And there's not necessarily nothing wrong with that, but there's something about the physical nature of having to ship millions of computer parts around the globe, having to spend millions of dollars on electricity, millions of dollars on electrical components, that really connects the blockchain digital network to the physical world, and in my opinion, brings real sunk costs to acquiring these scarce digital assets. Where staking your coins doesn't have a sunk cost. It doesn't cost really anything to start up a server and put your coins there. So I think a lot of the POS chains and a lot of the liquidity mining out there and staking is going to really hurt in a bear market, and you're going to lose yield, and you're going to be denominating your yield in this currency that keeps on falling and falling and falling, because the whole concept is who sells first, who locks in their profit first. And once they start doing that at scale, then there has to be a buyer on the other side. And that's where my confusion is with proof of stake. I mean, there's a lot of people building on the technology, and I don't think it's bad, but I don't necessarily know if it's as good of a feature set as proof of work and what we see with Bitcoin when it comes to security and decentralization and just grittiness and connected to the real world and real world costs that are going to help grow the network.
And I mean, that certainly brings up a mental framework. I mean, so is the harder thing more valuable? And it's like the way you describe it, it sounds like with Ethereum, we're trying to take away the pain point, but the pain point is the thing that makes it valuable. Is it something along those lines?
Yeah, it's one of the things that makes it valuable, in my opinion. I don't know if it is the only thing that makes Ethereum valuable, but it's definitely a key thing. And that I think has made Ethereum valuable is, I mean, when people are ordering 3,000 graphics cards for $5 million, I mean, that's real capital starting to go in the space. And that happens every single day. Like NVIDIA, GPUs, everything is being built, everything is coming out, these factories. That's real world costs coming in to support the network, which is that kind of self-fulfilling prophecy there, that feedback loop. But we'll see. I think it'll still do fine. I don't think it's going to crash and fail because they moved to POS or anything.
I don't know. It's weird. Like it makes me think so tech companies of 10 years ago created a massive amount of value by making everything easier. like they took pain points away, and that made a ridiculous amount of value, right? That all of the services that got really way cheaper online. I mean, that's what Amazon is built around. And but I mean, I guess they put massive pain points into it to make that happen. So with the Bitcoin network, we're sort of like committing to a certain level of work to maintain it, which makes other elements easier. Like it makes the monetary system easier, but it's like the work has to go in from some angle. It's like Netflix. We don't put a lot of labor into Netflix, and there's immense value in Netflix, but it's because somebody else put an immense amount of labor into Netflix.
And Netflix is a great example, Josh, because Netflix actually has Bitcoin, like miners in it, involved in it. So when we transcode a video to stream it to you to 4K to your house, there is a graphics card sitting in the middle doing that work, transcoding the image to your TV, right? So like there's these massive networks of computers all across the world, and now with like Video Coin Network, we're working on building decentralized transcoding systems that are cheaper than what Netflix and Amazon offer, so that you can use these transcoding systems to do live streams, so that anyone can get 4K through a digital network, through a decentralized network. So there's massive computers that sit behind the internet. Data centers have growth. If you look at the data center growth in the industry, it's going parabolic over the next 5 years, and it's starting to go insane. We can't build enough data centers fast enough. We have so much data, so much storage, so much computing needs, AI, machine learning, but you don't see that when you're sitting in your house. You only see that if you start to look into the trends, and you're like, whoa, we deployed how many megawatts to data centers this year? How much is Netflix costing the world? Netflix is bad for the environment. We should stop watching Disney. Like what? Like, I don't know. Like, it doesn't make sense.
I haven't even thought about it. We're working on decentralized streaming services. That sounds amazing.
Decentralizing every protocol. Anything that is centralized will become completely decentralized.
Okay, I have a question about that. That's because that one's weird with my brain. Because I'm totally on board with the concept of decentralization in the typical ways that, like the typical arguments about why decentralization is good. There's a greater checks and balances. There's more capitalist competition that creates a faster reduction in prices, more efficiency. A bunch of these things, like they all make sense. What about the fact that people like to group together? Where does that weigh in? Because there's an old biblical story that actually, like, I don't usually do a lot of Bible references, but there's this old biblical story of where, like, the Israelites had left out of Egypt, and they went through all these trials and tribulations to get independence, and then they settled into their country, and one of the first things that they said was, "We want a king." And then the great prophets or whatever that were leading them were like, all right, you can have a king. He will take your daughters and marry them without your permission. He will take your sons and send them off to war. He will tax and oppress you, blah, 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 blah. And their response to that was, we want a king. And there's this interesting thing that I can't fully sort through that has I don't know, status and leadership, stuff like that, where we do seem to have some organizational desire, some centralization desire. And I'm curious if you've ever thought about this, and let's leave it at that.
Well, I would say, do we have a centralization desire, or do we have a desire to belong, to be a part of something bigger than ourselves? Yeah. A community can still happen in decentralization.
Yes. Okay. What does community look like with decentralized services? Let's go with the video streaming services. So it's like the identity of the people is still centralized, but the incentives are decentralized. Is that what's happening?
Yeah, the incentives are decentralized. I think that's the biggest thing. Once you decentralize the incentive network and decentralize the work, that allows for more players to come in and innovate and have a direct way to start monetizing, which they might not have had previously. That's huge. Without the ability to monetize, you can't effectively build a company or a network. But decentralized networks let anyone small or big participate and get rewarded based on their share. And that helps us scale because you don't need the central authority. You don't need the mass. The mass is gained from the network to make like an effective use case of the technology. No one wants to transcode, use a transcoding system that only has one computer or something.
That makes sense.
So that's my thought, is that like you can, because the blockchain networks allow you to instantly incentivize people, it changes how it all works.
We want a future where people are allowed to be, or enabled actually, to be as selfish as possible and as connected as possible. Where it's like both the natural benefits that come to you from hard work and the protection that comes with the code of a blockchain that protects other people. So it's like enabling both of those things.
Correct. It enables a sense of a community, and then also enables the ability to work together and to be incentivized to not screw the system up. I think that's huge, like not preventing bad actors. Those are all really important things to building a network that functions well.
Getting to the video streaming is a perfect connection to the next thing I wanted to ask you, which was what are the most direct connections for content creators to the technology that's happening right now? Like where are the places where we can already start connecting the dots the most?
What is like the next frontier for content creation?
I mean, like there's a lot of things that are being tried at the moment. What do you think are some of the things that make sense and will probably work? Like we're doing things like we're making tokens for some creators, and for others they're selling NFTs. Others are hopping on decentralized content creation platforms. Others are selling tweets, for example.
Here's the big problem. There's one problem, and it's a 3-letter acronym. The problem is we can't pass through the not the capital, but the cash flow from someone's personal brand to their community legally right now in the United States. We cannot say, Josh, you're making all this money from advertising, you're making money from your investments, you're making money from your t-shirt sales. As you make that money, pass that money to your community, because now you're selling a security, and that becomes a problem in the United States. So that's what's holding everything back, in my opinion. And that's what NFTs are like. Oh, they're not securities, they're just art. And we're just selling art. Oh, we're selling our tweets. But there's no real value going to the user. The user doesn't get to build any value. There's nothing they own there. They own a digital piece of art that you own. Yes, that is memorabilia, but that's not equity. Right now we're selling memorabilia. Right now we're selling a signed baseball cap. We're not selling equity in the future work of Josh. If I could back Josh and I could own a Josh Terry token that then would allow me to get any of Josh Terry's LLCs or whatever percentages, and he decides he's going to commit 10% of his cash flow to this token, that is how you build real value and real wealth, number one. Content creators are realizing right now that they have tremendous amounts of power. We're finding that YouTube, $100 million shorts film they're putting out, Snapchat paying creators to create on the platform, TikTok paying ads. Creators are now this massive need and are now worth a lot more than they were 10 years ago. Because the content, what's happened is all these companies realize we need attention. When my video got 10 million views on TikTok, that was over 4 years of people's lives in a 30-second video captured of people's attention. That's insane. So, but I only got paid, $500 for that, $1,000, something very minimal. So what's happening is these companies realize they have to fight for good creators, because good creators are very limited. Not all people can create equally online. So that's kind of some of the things that I'm seeing in this creator space is first, we're having competition the time and the attention that you're able to suck up is becoming more and more valuable. But there's security laws that are preventing you from selling your almost like your personal equity or giving cash flow from these creative activities to people. And all we can do right now is sell memorabilia, and that's where we are. That's the stage we're in. And people like creator tokens are working on it, but they're still not getting cash flow. They're still, this is a great idea, but where's the cash flow? Where's the functionality? Where's the value creation?
So it essentially has to become like buying a stock.
It does, but you buy a stock because there's dividends behind that stock, and you buy a stock because there's a cash flowing asset behind it. And social tokens are a great step forward, but it's not there yet, because it's still like, oh, I'm making my social tokens, I'm giving you access. You're getting access to me. Okay, well, that's just, I can pay cash to get access to you. Hey Josh, I want to talk. Here's $100. Hey Josh, you don't want to take $100? Here's $1,000. Hey Josh, you want to take $1,000? Here's $10,000. Right? That's all that is access. You can do that to anyone. Tom Brady. So that's what I think about creator tokens, and I've been working on it for a while. Like, I have a company called Tokens. I think it was gettokens.co. We have an app on the App Store. I tokenize like myself, but it's really hard to get the nitty gritty down. So I'm hoping we can make Bitcoin mining a game and make players a token on top of that game, and so you can like build your Bitcoin mining empire. People can buy your token and get a percentage of the empire. And because if you don't have enough money to buy a Bitcoin miner that costs $20,000, you need to be able to do something with that capital. You need to be able to have an investing class for $500. But yeah, we'll see where it goes.
Do you think legislation will get changed? Do you think we'll invent a new way to do it? Or is this sort of like the questions around like, well, could a government control Bitcoin? It's like, well, doubtful. It's worldwide. It's not governmental. Do you think this could be another thing that becomes sort of a I don't have the perfect analogy, but the thing that comes to mind is Pirate Bay. And Pirate Bay was too centralized. That ended up getting shut down many times. But the concept of Pirate Bay was very decentralized. Do you think it could end up going that route, or do you think there's a more official route that it could go? I
think, outside the U.S., it's probably already happening to some extent. I think that's just what's going to happen if the U.S. doesn't update its laws. We're just going to get passed by other countries building outside of the system. But I think the NFTs are like the first kind of like, hey, here's some art, right? Here's the first version of this. And there's just too many things going on for it to be enforced. And I think that people are going to kind of be like an Uber. They're going to step in. It's going to get so big so fast. Yeah. And especially if it's decentralized, no one's going to be able to stop it.
Yeah. It makes too much sense for it to not work at some point, to fund creators.
Well, it makes so much sense because it's not even creators, Josh. But if you're an employee and I'm investing in you as a company, why am I not buying your token? Why am I not getting 10,000 of your tokens because I just hired you and I'm going to teach you how to work for 2 years? It completely changes how we incentivize people.
You just blew my mind again.
But we're losing, the state loses control of money. The state loses control of money, and that they don't want that to ever happen.
Okay, that goes right to my next question. So first of all, I guess central banks are probably some of them are going to put some Bitcoin on the balance sheet, but also they're going to be launching their own coins. What does that look like?
Central banks are they're glorified banks, right? They're the top bank, the God bank, and it's going to be very simple. It's a protocol layer, just like the Fed system, just like the wire system. When I send a wire, the bank gets the $100,000 just like that. Boom, done. I put it in the network. They say, "Yep, you're good. Here's your ID." They're not sending the money in a package, through the network. Here we go. No, they say, "Okay, database, go from Coastal Bank to Chase Bank." Done. I can count this one. Like, that's all they do, right? So that's the same thing with these CBDCs. And it's on a blockchain, so it can be verified by people who have access to the blockchain, and that's it. It's really just a marketing thing for central banks. They already have the software. It's already centralized. Going into CBDCs, they're not going to decentralize it. What they do is they just remove the banks. They just say, banks, You're no longer needed. I can do direct stimulus. I can say, if you're white, your loan percentage is going to be this much. If you're a minority-owned business, I'm going to give you money for 3%. If you are a woman-owned business, you're going to get it for 2%. They can now do everything they want and give very direct stimulus and very direct loans, which hopefully will become better, because our current banking system is, oh, who do you know in this rich, in this society, and can you talk the talk? Can you walk the walk? Do you look like you deserve money? Do you look like you already have money? And if you do, here's some more of it.
Personalized fiscal policy freaks me out. I'm not gonna lie.
It freaks me out too, man, but it's where we're going.
Yeah, it seems inevitable.
It is inevitable because it provides way more control and granularity than the government doesn't have right now.
Yeah, I've already extrapolated to like we're gonna have three-dicked humans running around, and we're gonna have people with tails, and like there's gonna be all sorts of crazy shit like that. Like I've already extrapolated that. Like for some reason that makes sense to me. The genomics element, but it's like the financial element of like it feels so. I get the sensation of walking on shaking ground when I think about it, where it's like, how do you get a reference point when the fiscal policy is not uniform? And I can see how it could do lots of good. It's just a bit terrifying.
It's scary. But like you said, it's out of our control and it's bound to happen.
What are some of the less obvious jobs in the crypto mining spaces? Like we know the programming stuff, finance, accounting, but like what are like blue collar jobs in the crypto industry? What are things that are entry level, things that you can get started with?
You mean jobs like for people that are working at facilities, or jobs for people? I mean, so in the crypto mining industry, you have like software jobs. You can build software, like mining software on top of that. You can build mining pools and take a percentage of everyone's mining hash rate. If you understand how to build software, if you're more like blue collar technicians, fixing computers, doing chip soldering on Bitcoin miners. I mean, each one's a piece of gold. We're talking $20,000. I mean, that's a car. It's a car. You're a technician to fix cars, being trained how to fix computers, going to these facilities, offering your time up to fix their batches of computers, having your own little repair kit. I think that's going to be in the future. People drive around to like mining facilities, be like, hey, I can fix S19s. I have all the parts. Like, I'm happy to fix it. I'm a premium, but if you have any down machines, I'll fix them for you right now. Technicians running facilities, network engineers developing it, mechanical engineers, airflow engineers, all designing facilities, liquid, immersion engineers, and this new liquid immersion lifestyle we're moving into for Bitcoin mining. Those are all really, really important things and people that are building in this space that I can think about right now. But then you can get to like even marketing, content creators. Like my marketing manager who runs my TikTok, she's like, I got you 18 million views in the past 90 days. Like, I want paid more. And I was like, well, yeah, that's not really how it works. Like, this is your job to make TikToks. The algorithm did all the work. You made the video. Yes, that's good. That is true. But now she's like, going to make her own TikToks on Bitcoin mining. And I'm like, I was like, that's a little weird now. You post on your account, post on my account. But I was like, no, I should be supportive of this. This is exactly what I want to do. Democratize the ability to sell and buy Bitcoin miners. And if I can take a 27-year-old female in Oklahoma and have her go and start making her own Bitcoin mining videos and start selling Bitcoin miners, I mean, that's the goal. That's the goal, to make it so anyone can buy or sell these and make content about Bitcoin mining, to share this idea, this idea of this new monetary system that's backed by these energy computers. I think that's amazing. So even just the content creation aspect, the educational resources, building out places where people can compare cryptocurrency mining companies and the stats on those companies, getting more data, bringing more transparency in the industry, all of that, so much opportunity. And even like supply chain stuff, working on how do you effectively ship machines from the United States to China, what's the best way to do that, which carriers do you use? Huge opportunities in the industry, because you're moving billions of dollars of physical equipment. And insurance claims, building a decentralized Bitcoin mining insurance protocol, because insurance doesn't really want to insure these goods, so letting people insure it, letting people insure the value of hash rate in the future. What is that going to look like? Those are all things that need to be built out, for this industry to survive and will be built out. A lot of opportunity though.
Yeah, it's exciting. It's so cool to see something so full of energy growing so quickly. What is your company like now? Like we talked a bit about like what it was at the beginning. Like what's the structure of the company now? What are you guys working on at the moment?
Yeah, so right now we're working on locking up some power. We are able to lock up probably anywhere between like 150 megawatts of energy and get that deployed over the next year. So I have engineers working on that. I have a team working on that. In addition to that, we have a engineering team working on designing our own infrastructure, so our own containerized solutions that we can stack like hotel buildings or hotel rooms in a massive deployment and be able to scale hundreds of megawatts of energy infrastructure in a quick, timely manner, and be able to automate that process in almost like a Tesla-like factory, where we're building out our whole supply chain, we're deploying these containers, and we're continuing to deploy mining equipment in it. That's one part of the business. We're about to really go deep in about 6 months of R&D, get a factory. We're about to start an equity round and raise equity capital to fund that project. Then I have on the software side, working on building out a mobile app and gamifying the Bitcoin mining space. I don't think there's many people working on that, raising capital to build that out, to build a software team, hiring my old boss back in the day who I used to work for as an intern, and building out that software technology. So that's another route we're going, and then physically developing our own mining unit. We've been really interested over the past couple of months in the Helium network and the Helium mining units, and a lot of people come to me looking to buy machines for under $500, under $1,000, and we don't have a good product for them. So we think that Helium network is going to decentralize and change how the internet works and how these devices change, like the Lime bikes and different types of IoT devices access the internet. They only have one person right now, it's Verizon, they have to go to, that owns the fiber networks in the United States, and this is changing the game for them. So talking to people in Shenzhen looking to put a production run in and build a couple 100,000 Helium miners and sell them through TikTok and Instagram. That's another route, but those are the three like big focuses. And then we have looking at insurance markets and how do you build insurance products, how do you take away some of the risk from generating hash rate and yield and making sure you can pay your bills, and some of just my thoughts in my head there. But eventually it's finding the right people, putting together the team, and it's giving them the capital to go run with it. And that's what I'm getting a lot better at, and it's starting to really pay off now. You're starting to see compounding results from processes you put in a year ago that are starting to return 10, 20 times X on the capital you invested. They're doing it consistently every year.
There's a lot of people that are really involved in Bitcoin that kind of don't see any other element of the space. And then there's a lot of other folks that want to be everywhere. And one of the things I think is really interesting about you is you're super involved in the Bitcoin space, but you seem very open to other elements of blockchain technology, other crypto projects, other things that are going on. When you think about investing in something that's not Bitcoin, what makes it have value in your mind that it's a project worth approaching?
You mean when it's not Bitcoin? You mean when it's not touching Bitcoin, or you mean like when it's just not involved in crypto?
Well, there's sort of the whole, like, anything that's not Bitcoin is a shitcoin kind of a philosophy, right? That a lot of people sometimes have. And so, like, for example, one of the ways that I'm looking at it is if I see, for example, a coin that markets itself as, we do this better than Bitcoin, I immediately ignore it. To my mind, that's just not even a thing, because to me, Bitcoin does Bitcoin very well. But then when I come across a project that's like, hey, we're trying to accomplish something completely different here, then my ears perk up. Because I think that a lot of folks that can think Bitcoin only, to me, are doing one of two things. They're one, either like considering all of these things to be currencies, which I don't really think of it that way. To me, a lot of them, I look at them as like stocks. Um, like you said about helium, like to me that I process that more like a company than I do a currency, right? And then the other aspect is like I don't think that people that think Bitcoin only are taking in the nature, like the infinite nature of human desire, which is like, okay, let's say Bitcoin won completely. Um, what would we do then? Well, we would decide to do something else. Like we'd come up with something new to do because we like doing things. And if Bitcoin became the most successful blockchain technology, and let's say that plays out, and all the engineers got involved with making that happen. Well, once it happened, the next thing that those engineers would do is try to make something new, and they would be educated in blockchain technology, so they would naturally use the toolkit that they have. So I'm that's the one of the reasons why I'm not sort of like in the total like Bitcoin maximalist camp, for example. I'm not like fully in that direction. And I've been interested in watching how like you're so involved in Bitcoin, you know that that is kind of the winner, but also you aren't afraid to play in the other camps. And I'm curious, like, how do you approach like finding the projects that seem worthy?
Yeah, I mean, there's a lot of projects in this space, a lot of FUD going on, a lot of people working on cool things. For me, it's about finding people that are really breaking industries and doing it in a place where blockchain is useful. So like an industry like, like going back to the Helium project, an industry that is massive, internet everywhere, and has incumbents that are so big that they're kind of restricting competition. There hasn't been any innovation in the space. People that are taking blockchain and going and targeting that type of problem, I think are going to find a lot of success when they're distributing power to people, decentralizing it to a network. When you're just copying like, Ethereum and just duplicating it and doing like Ethereum, oh, okay, great. EOS, okay, great. Next coin. We're all descripting languages on top of a blockchain where you build your DApp. That's great, but it's nothing different. I really like projects that are in the physical world and the blockchain world because I see how much opportunity there is for that. So that's kind of what gets me interested in different projects. But it is hard. There's a lot of things going on. Everything goes up in value at once, and then it all crashes at once. There's a lot of cool software like in the DeFi space being built. I think that's super cool. Like Uniswap, them building out their stuff, but then like being able to get yield on your Bitcoin is another thing. And that's part of the reason why we Bitcoin miners. Like you can take your Bitcoin, you can lend off your Bitcoin, you can use that cash to buy more Bitcoin miners, and you never have to sell your Bitcoin. And those Bitcoin miners generate more Bitcoin, and the feedback loop just keeps going. So how do you build these positive feedback loops where people can then just deposit money into it, deposit cash, deposit Bitcoins, and then continue to generate interest? Because interest is a force of nature. It's the compounding force of nature that none of us see, but affects all of us every single day. And once you understand that, how powerful interest is, and you can have your money work for you, you no longer are thinking about paying your bills in a sense of like, I need to trade 5 hours to buy this, buy this buy this skateboard. I only need to, make $10,000 and have that $10,000 be invested at 5% interest to generate this much cash. So it's kind of swapping your mindset. And as you do that when you grow up, and as you grow older and as you become more mature and more financial literate, it changes how you deploy your time, what you focus on, and you gain more value. You gain more freedom at the end of the day because your money's working for you. That's why I think it's so important with that measuring stick. If you're using Bitcoin as a measuring stick, it's the most sound money in the world. And putting sound money to work for you allows you to take way more control of your time. And instead of climbing up a hill to get freedom, you're climbing down a hill or walking down a hill because the Bitcoin network is helping you out, I guess, if that makes sense.
What do you think are some of the biggest holes in the crypto space right now? Like what's something missing that it's like somebody's going to come and fill this gap?
Biggest holes.
Another way to say it is, where are some of the biggest opportunities?
I think the stacking walks. I think Bitcoin mining is way undervalued. No one's, not many VCs are in the space. No one's really talking about it. It's still very young, and it's massive amounts of capital going into billions of dollars going into energy infrastructure. Infrastructure is expensive. Software is cheap. That's one of the opportunities I think out there. I think the tokens we talked about, social tokens, that's a huge opportunity. Someone's going to crack that nut, and maybe it's me, but it's going to be huge for people that are building on top of this. I think automated investing strategies, just yield on your Bitcoin, will be the next big space. Interest-bearing Bitcoin is huge, and there's IBTC that provides interest, through liquidity mining. So just how do we gain interest on this sound money? I think insurance markets are going to be disrupted like crazy. I'm already seeing that. Nexus Mutual, my friend Mike launched that, and he's doing a great job. They're at almost at $1 billion or more valuation, and they're decentralizing insurance. They're letting anyone insure their crypto projects and their stable coins, through this decentralized marketplace where the community takes the other side. So I think insurance is another huge aspect and opportunity. And then just like random institutional products, like, getting Bitcoin, being able to buy it in your checking account, like New York Dig's working on that. That's going to be super cool. Just lowering the barrier to entry across the board to enter into crypto, and then building on top of these crypto projects and protocols is what I'm most excited for.
It's an exciting space. It's really cool. If you crack the social tokens, hit me up. I'm now getting contacted every single day about a token. Like it's been for like 2 weeks now that somebody has DM'd me every day about a token, and it's a interesting thing. It actually kind of like it does stress me out a little bit, because it's like, I don't want to go and get sponsored by something that's misleading, and there's so many altcoins out there that are just pump and dump and all of that. But at the same time, I know that there's a lot of legitimate, amazing things that are happening right now, and it's incredibly exciting, and I'm excited to see more of those happen.
I'm excited to see it happen as well, but I don't know who's going to crack it. It's a lot of decisions. Like you said, it's so hard to figure out, where do I want to go? Where do I want to jump into a platform? Are people asking you to join theirs, or are people asking you to just get one, like a community, like someone, your fan, like saying, I want to buy your token, get it, go find
all of
one.
the above. It's just a hot topic right now. It's just a hot topic. And the vetting process is it makes me wish I had a little bit more technical knowledge, but just I don't know, it's a fascinating thing, and I know that a lot of good is going to come out of it. Like as much as we like to talk about, like, all the scam coins and all of that stuff, I really think that ultimately all of that stuff is just an exploration of us trying to find the good, and I think that we're on the way to find some really, really amazing stuff that's going to provide, services that, 10 years down the road, we're going to be like, well, how did we ever live without that? Well, thank you so much for doing this. Where can people find you online, and where do you want to send folks?
Yeah, JP Baric on TikTok, on Twitter, on Instagram. I'm John Paul Baric on Instagram, but check me out. Happy to talk to people, investors, if they're looking to get in. If you're looking to get into mining, you send us an email, sales@miningstar.com. And yeah, thanks again, Josh, for having me on. This was great. Let me know when the social token comes out, and if you need help picking a platform, I'm happy to review something.
Awesome. Thank you so much. This has been great.
Thanks again, my man.